Welcome, everyone. Can we do a sound check, please? Welcome to our midweek software strategy session. I am Stephen Vetterl, the formal chief marketing analyst of the company. I am your risk manager. So it is my intention for all subscribers to try and help navigate the lunacy that may be ensuing later today, breaking of the US dollar going higher. We'll talk about that. But essentially just trying to keep you guys safe, keep you in check, have you think about certain stuff, maybe give you a little education along the way. If you have no risk management or trade plan, I will challenge you, even though new versions of different types of software coming out are going to have less to be monitored, still going to be required, in my opinion, to be successful at this, to always be assessing your trade plan. Your trade plan could be something as simple as just a couple of pages. So let me go through the risk disclosure a little bit real quick. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can have an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market using any of our software alert products, you should carefully and diligently consider your personal investment objectives, levels of experience, and risk tolerance. Can you afford to lose the money, right? So if you are sharing any of the results from any of the software coming out, including the 3 that exist, please do not use the term company recommended settings. We do not have any company recommended settings. That comes from myself, some of the other coaches, the developers of the software. Has nothing to do with Auvoria. So they're not a financial advisory firm. We don't manage money. They just license software. We have other softwares coming out where it has settings. You can open it up. It has default settings, but you can adjust some of those settings and set it at your own risk and discretion. So the default settings, and we really have nothing to do with a customer's brokerage account when a solicitor take investments. We don't recommend any brokers. So Auvoria just licenses software. This is also a shout out to all the coaches that are doing a hell of a job. Let me switch over to the other screen. So this is the trade tracking channel. Let me see if we can make this a little bit bigger. I would highly suggest you subscribe to this. You can go into the back office and you can see the link to the channel. Please go that route. Notice I purposely don't put this in the chat window for a reason, as I want to navigate everybody into that area. We will have obviously onboarding videos that come around. The reason I'm showing this, and hopefully you guys can see this, this is the Telegram channel here for myself, Trade Tracker with yours truly. I don't normally do this, but I actually broke from tradition of risk management. I don't know. Maybe this is going to get someone into trouble. Maybe it's not. If you follow this step by step, it'll allow you to adjust if you're in drawdown. I really wouldn't be messing with this if you're not in drawdown, by the way, guys. But if you're in some form of drawdown, this is a good way to sort of turn off some of the levels of trades that this takes. Okay, I specifically try and stay away from this. Again, this is sort of on that edge of, do I think I'm smarter than the software thing that I'm always squawking about, right? So just take note of that. That was September 18th I posted that. Do also note that all of the master archives for the Wednesday and Saturday sessions are not all in the back office. They can only house so much of that. But you can go directly to the Vimeo channel of both of these. So not last Saturday, 22nd, but on the 15th, as you can see here on the calendar, that's when David presented his different type of settings. There's different settings. If you're new to the team, welcome. We have a high volatility settings, as I talked about ad nauseum on Alex and Alexander, or Einstein and Alexander over the last 4+ months. We also have brand new settings that you can use in addition to those or in place of that we showed on the 15th, and this was David's presentation. So do know this. I've had a lot of requests for a public posting of the spreadsheet. We cannot do that because it's really on the edge of performance, because you could play around with all kinds of different stuff in the spreadsheet, and it basically shows performance, and doing all that. So we don't really want to get involved in that. And honestly, there are a lot of spreadsheets floating around. If you ask some of your big directors of your group, if it's not your upline guy, that you can ask them, they'll have spreadsheets available to you. If the Q&A window is open, I would ask you to post your questions, please, in the Q&A, not the chat window. All right, so let's get on. I talked about this on Saturday. I actually don't have any trades on this week, and these are in my personal accounts. So I turned a lot of it off just because there's some craziness going on last couple of days, and it looks like at least some of the accounts I follow in demo with Einstein and Alexander for other individuals, they're taking a beating, and some of the software is taking trades on the bullish side while this thing's selling off right now. But Fed Chair Powell, and there's a whole bunch of other stuff this week. Literally everybody's making some comment, from Treasury Secretary Mnuchin to Fed Chair Powell to the heat that's building up on Capitol Hill among all our knuckleheads in the House and Senate around the bailout packages and fights over that. There's a lot of different central bank presidents speaking, Bank of England, Bailey as well. So I just decided to have it off. Let's take a look at the charts. Start off with dollar here. So with the dollar chart, you're looking at the daily here. Let me just draw this one line so everybody can kind of see. Really at a point of no return if we get above this level, in my opinion. So as this level is really contained, this is, because a lot of people look at this as, oh, isn't this a great place to take a short? Yeah, we're right up against it. Essentially, it's the fourth touch of this area. Typically, I won't stand in front of a third or fourth or even arguably a fifth touch of an area. 4, 5, I actually say 3, 4, and 5. I usually do not touch because we're looking probably for a break. Okay, so this is breaking from a little bit of what I thought would happen, essentially as a consolidation, then it's head lower. I think what we may see is a fake out, and then we fall back into the range and go crashing down through the bottom. That's typically what happens, but I could be wrong. So always want to know if, you always want to have a backup plan if your main thesis is incorrect. So, but that's kind of my idea. Ultimately, I think in the longer term, we are headed lower on the dollar, thus higher on most other currencies. But you can see, look now, we switched to the euro US dollar. For those that are not sure what I'm looking at, this is tradingview.com. It's actually very simple to use software. It has some of the sophistication you'd find in a Bloomberg terminal. And I kid you guys not, which is close to 2 G's a month. So those of you who don't understand how rich Michael Bloomberg is, there you go. So imagine if you're an organization and you've got 100 employees and they all need access to a Bloomberg terminal. They don't give you that much of a discount for multiple subscriptions. I think the least it drops down to is about $1,400. So it's ridiculous. So in any case, I gotta tell you, I think I should buy some stock in TradingView. I really do. I mean, these guys are just killing it. In any case, so this is the chart, and looking for it to hold, which so far it has for our support line, down just under 17, right? And maybe it'll rally back up. Who knows? Maybe I'm wrong. It's just an idea to keep in mind. If something like this breaks, the problem I have with our current arsenal of software that will be maybe something I can't complain about on a broad scale once we have a much more diversified group of software out, is that once you have a break in something to a large degree, especially after a significant period of consolidation that we've seen, which is almost 2 months, we break lower on this. I would not want to be long. Okay. And that's kind of the problem with this. And this is why I decided to, for those that want to take, a deeper look into, turning off longs or turning off shorts. Again, this is that slippery slope of us saying we're smarter than the software. But for a period of time, like when this breaks lower, it just may be a wise thing to be on the short side of this trade if we do go into some trend lower. Now, if I'm wrong, then Einstein and Alex will more than do their job, because this will be a fake out and then it'll rip back right up into there. So all the buys that you guys have probably been noticing that are being taken right now down at this level on Einstein and Alexander will rally tremendously, because if we can't get below this now, we're probably going to rip higher, and we'll probably blast through this upper band of resistance. Just my thesis. So let's take a look at GBP USD. Again, right on that 200 MA line, which is the green line here. Why is that important? Because everybody else thinks it's important. So it's a self-fulfilling prophecy and technical analysis. You want to note stuff like that. I'm just trying to keep it simple. Each one of these candles represents a day, right? The greens, bullish days, red, negative or bearish days. Very simple stuff to understand. So as I joke with one of my oldest clients who's 94 years old, every time I go back to see her, she's always like, hey, you got those charts on the S&P 500? Literally bust out the daily charts, and she can tell me where all the S and R lines are, and helps her understand where the market's going, right? So we're on the edge. Now, I tell you, the surprising thing about this, and this is probably just Brexit stuff, obviously, right? Currency markets getting whiffs, things not going smooth in trade deal exits from the European Union, right? Gee, there's a surprise, huh? But essentially, it's putting some pressure on the currency. The fact that the dollar's rallying doesn't help either. So I think this is kind of a negative right now, obviously, for GBP. Really at a pretty big support line. I mean, you can just draw one big line across this whole area. You can see that it was pretty big resistance, and then we broke through it, come back down against it. Typically, it's resistance. Now, whether that's the case here or not certainly remains to be seen over the next day or so. Just my observation on it. Okay, same thing with USD JPY. I don't really do as much work on this stuff. I know guys like to see this, and you guys like to see this, but here's our favorite hated currency, Euro JPY. See where we are with this. I still think at some point the euros and the yen, their correlation with each other is just mostly driven by primary movements in the dollar firsthand. So this is, even though it's a major currency, it's being wagged around, in my opinion, by the US dollar. Take a look at GBP NZD. Been kind of crazy down here at the bottom. Now we're starting to consolidate some really raging moves, both up and down. That's kind of where we are there. Gold, for some of you guys are asking, hanging right on the edge here. Notice we're bouncing right off this line. Had a hammer reversal yesterday. This is a big candle, but whenever you guys see anything like this, especially on the S&P, is a great example. Here, let me switch over to this. Anytime you guys see a hammer reversal candle, especially on a daily chart or like a weekly, this is usually pretty big, okay? This usually means that there's been some sort of, especially if it's right near a big support or resistance line, you have a hammer right off this. Ideally, I'd like to see this candle finish green, but this is close enough for me. This tells me more than likely the next day is going to be up. Now, honestly, if we finish at a doji, which just looks like a sign on a cross, which is an indecision day after a hammer reversal, a lot of times we're going back down, right? So it's possible, but just reading the tea leaves at this point, for especially on a daily chart, anytime we finish with, and there's tons of chart patterns I'll show you guys over the coming weeks and months as we get a little deeper into this, but What else do I want to show on this chart? Do note with oil, it has been an absolute non-event. So keep in mind, there's been times in the past where this has absolutely led the world around. It has been the primary driver of movements, and then very correlated, if you will, to some other asset classes or commodities, certainly currencies. Recently, oil has not led the way at all. It's been very flat. Okay, so typically when the dollar's selling off, you have a rally in precious metals. Typically is the case. That's not necessarily the case for all the rest of the commodities out there in the world. As I often will suggest to folks in the commodity land, is go to a website called finviz.com. I know you guys probably seen me show this a lot. I love it because you can get one big shot dashboard. Just click on futures and you get everything. Okay. So this is like a complete everything that's going on in the world. And this is just the quotes. So you can actually chart it as well. So a lot of times I'll chart it and notice you can just click on daily, or you can look at a weekly if you want larger trends, but you kind of want to see what's going on in relation to what, right? Like all the heating oil and currencies are all pretty much in line. You can see how some have been rallying and then selling off, but it's a good way to sort of note all of what's going on. At the bottom allows you to see what's going on with the dollar. Again, these are daily charts. Each candle represents one day. Euro, JPY. See the correlations, the disconnects, or the uncorrelations that go between different charts. Again, real broad, real macro stuff. I'm just trying to get you guys a little deeper. We'll walk essentially into about the 2-foot part of the pond at this point. Eventually, hopefully, I'll have you guys up to about knee height or waist height in water as far as technical analysis is concerned. But I think it's important to understand correlations. So, first question, would you suggest keeping trading off or should we start accepting? What I said on Saturday, I'm going to echo the same thing. I don't like the current climate. Okay. Now, again, I could be wrong, and there could be people making profits this week, and geez, we followed Steve, we turned it off, and our friends made 2%. It's not a big deal in the grand scheme of things, guys. I think this week's just a little bit fraught with risk. I could be wrong. I think we're probably going to break on some stuff. There's too much conferences, if you will, and or testimony, especially with Chairman Powell in front of multiple committees for the House and Senate this week, especially the banking committee testifying. That's a big one. I just don't want anything slipping and taking a particular currency or a commodity to the edge of where it already is, and then just off the cliff it goes one way or the other, right? So that just sends, in my opinion, martingale type trading systems into a tough position because things start trending. And it's throwing trades out both left and right. While I think it should be adaptable and go into a trend, but I am not a developer. That is for a different discussion. All right, next question. Very selfish question. Yeah, it's okay. What's it going to take to get GBP JPY back up to 143? I'm in tremendous drawdown. So, Marty, one thing I do not, nor have I ever endorsed that currency, because I think that currency is a case for the nut house. Okay, so let me just show it to you on a chart. All you do is you type it in and you just can click on the currency. So here it is, British pound, Japanese yen. So, and just we're looking at a daily chart here as well. I can't read anything into this other than when we broke from, I guess we could probably, the problem is this is not that good of a read on this right now. What I probably would have done if this had been an Alexander situation is once we broke under, notice this candle here, the one I'm pointing right at, it's green candle, finished. It bounced off the line, and then we just blew through it. Once we blew through it, then we had a bunch of dojis, basically an indecision type candle. We had almost 5 of them print in a row, and then a hammer reversal. I would not have been accepting any buys from an Alexander standpoint on this currency. Wouldn't have accepted one. Now, I granted everybody can't have, this crystal ball type of insight or deep technical analysis. And trust me, I screw these things up too. But it's just the statistical significance of not wanting to accept trades in a particular direction once something breaks. You have an advantage if you are technically analysis oriented. Is a word, right? Is that even a word? Using Alexander, because you can accept and not accept certain types of trades depending on currency or trade, depending on whether it broke trend or not. If it's, as I guys show you guys a lot, I prefer you guys get much more educated and or be trading the Euro USD because there's a lot more volume. It doesn't act as crazy. It's a lot more predictable. Softwares, almost all of the softwares we have for that matter, and the new ones coming out that I've been privy to the numbers, all have statistically significant advantages in terms of win rates on the Euro US dollar. Okay. So if you're off trading crazy currencies and you can afford to lose the money and you know what you're doing, great, have at it. But for gosh sakes, if you don't know what you're doing, you've never run a demo, which I think is a big, big deal, you are doing yourself a disservice. That's all I'm going to say. All right, so let me double check this here and make sure. You guys see my screen okay? Stuck on DXY. Yeah, looks like you guys still seeing only DXY? We having some technical difficulties? Or do you guys see still on DXY? Interesting. Tell you what, let me show a different screen. See if we can get it to go back. Let's show the risk disclosure again. Do you guys see the risk disclosure now? Nope. So that's a first. I haven't encountered this type of technical. So let me stop sharing. How about that, right? Let's just stop the share and let's try again. How about now? So let me open up the chat window again. There we go. Bingo. So look at that. We learned something. So when the damn screen's frozen, stop sharing. Start sharing something else. Love it. And for those of you that are interested in equities, Zoom is at a new high. Because I had a number of people ask me, should I be buying this thing down at 350? I said risk capital only. We were lightening up tremendously in client accounts on this stock, but this thing is just monster ripping. This is grossly overpriced Zoom stock. I highly suggest anybody that's been in it for like we have since the high 70s, take something off the table. Okay. The stock is not worth $500 a share, guys. This is bananas movement. Okay. just a heads up. That's all. All right. Let me show this chart again. GBP, JPY. If we didn't see that, so hopefully it's switching over. So this is the British pound yen I was talking about earlier. So once we broke under this 200 MA line with a big candle, and then we had a bunch of dojis print. This is what these little things look like. They're just called dojis. It's an indecision candle. It doesn't necessarily mean we're rallying. Usually it means the trend's going to continue down. If I had Alexander, I would not be accepting buy orders on this right here, period. I probably would have saved a whole bunch of money down here. The problem with Einstein is, you're getting into turning this off and turning that on, and, you're just, but, as you guys get smarter, if you want, you can always switch your subscription over from Einstein to Alexander. You can always do it. Yeah, do keep in mind, I got the question last week. Got some clarification on subscriptions. And tell me how cool this is, guys. So the subscriptions going forward, regardless of the software, it's going to be $99. That's it. So I would call all of your people, as we have done in our team. Most of them have stayed on board, but some have gone dormant. Just tell them, look, we got some killer software coming out, and the subscription's only gonna be $99. And this will allow people to have 2 and 3 subscriptions to different software. But just remember, if you want to do demo and live, you can always switch between each other. If you're demoing and you're live, let's say you hit your weekly goal, you're not using trailing equity, you're using like a fixed weekly goal, you hit your weekly goal maybe Tuesday, you guys can demo the rest of the week. Just a heads up. All right, next question. So in the broader picture here, so what is going to take the pound to rally in any case is for them to get these damn trade deals worked out with the European Union, right? Number one. And number two, dollar weakness. Those are the two things that are going to need to be happening. Neither of those right now are happening to any large degree. That's what it's going to take. All right. I cannot share the Excel sheet, guys. There's plenty of them out there floating around. You do a deep enough dive with your up or down line folks, you will find there are tons of risk-based spreadsheets out there. There's lots of good ones floating around. We can't share those from a corporate perspective because there are performance orientation in there. So the $99 subscription is going to allow, keep in mind, guys, the reason we've done this is, it's probably tenfold, right? But some of the main reasons of this is just some people can afford this because, there are a lot of third world countries out there, especially in Africa, and maybe even chunks of South America that really want to get in. But this is very costly relative to the conversions of their current dollar. But it's much, much more palatable globally if it's $99 US dollars, right? So, yes, you will always have access to Alexander and Einstein. Questions on anything else? I do not know. They have the 17th of October pegged as sort of like a hard date to get variable out. I think the problem is the coders just didn't realize the depth that was required to hook up this EA and the other EAs, for that matter, of maybe a more ancillary nature to a subscription base in our back office. It's been a mountain of work. I'm not a coder, but that's what's going on. So, I hear directly from developers and some of our global directors, a couple of my friends, and I always ask the question every damn week, what's the story? Give me the real deal, and that get the same story every week. It's a lot of work. So, hey, welcome to a 5 months old company, right? So going to be trips, hiccups, and all kinds of stuff along the way. But right now, just taking a closer look at the competition, which I haven't done to any large degree. We will have better education, better products, better compliance, better pay structure, better dudes on microphones and female and male and all kinds of coaches, including yours truly, hopefully, than the competition, and that's what's important. All right, so I'm not going to take sides on software, guys, because honestly, if one knows what they're doing and they're using Alexander as an example, they could probably clobber the returns and variable. Not everybody's going to know what they're doing. I get it. 99% of our subscriber base is not going to be technically oriented and trading oriented. That's fine. In that case, a much lower maintenance, still requiring some maintenance in terms of demoing, understanding settings, and listening to my calls and all that. But the other pieces of software coming out are going to require less demand as far as settings, all the stuff. So I've been kind of trying to get away from that. I still have, we still have the FX books hooked up. They're still doing, pretty darn well. As you can see, the growth trajectory just the last couple of months has been some of the biggest in our big account here. Some of the performance in it has been, granted, it's in $700 in drawdown right now. And a lot of that has to do with just buys on the Euro US dollar while the thing's selling off. But if it does rally back, it's gonna clear a lot of these trades out in the flat or in the black, which should be good. But we can't complain of this account. I mean, we took some beef on this account, and honestly, we switched to the high volatility settings, and I may even switch one of these accounts to David's settings. It was on the webinar 2 weeks ago on Saturday. Listen to it, dial it up, listen to it 10 times if you need to. But ideally, in the grand scheme of things, as far as just a broad risk discussion, especially at $99 a license, what I'm probably going to do is have 3 or 4 licenses. I know you guys all can't afford it. I get it. But in terms of diversity, I'm probably going to have 3 or 4 licenses, and I'm going to be running, and I'll show all you guys these accounts. I'm going to run them live, put anywhere between 5 to 30K in each of these accounts. And I'm just essentially going to run them all on the recommended settings from the developers. I'm not going to be derivating, is that even a word? I'm not even going to be deviating from the settings recommended by the developers. But I ideally want to run about 50K with 4 different types of software, right? I don't have time for Alexander, as many of you guys know, but I want to run Einstein, Variable, Stratamus, and I know there's a couple others in the pipe coming out that have done really well. So, but ideally, if we can do that, and you keep in mind, it's important always to look back and see, what can I afford to lose? What's risk capital only? I usually will tell clients, and I'll give the same financial planning advice out to the community, regardless of the size, unless you are very small in terms of size. I usually limit risk capital to no more than 10% of the portfolio. So if somebody's got $100,000 to invest, maybe a chunk of it's already in your 401k, maybe you got 20K outside of the 401k, you can risk, maybe 5, 7, 8 grand at the max on something like that. Nothing more than 10% is the best way to go. And I know that sounds like maybe not a lot, but my suggestion is you can save up and get to that point. But ideally, even a client that has 10 million, and I got a few within that category, I'm going to introduce some of those clients to these pieces of software when they come out in about a month, but I'm not going to let even the largest clients put anything more than about 300 or 400K in any one of these strategies. And the reason is we want to see it play out. We've seen it play out a lot already. Some have been in demo, some have been real. But I want to get a taste for it before I go setting up a fund and or putting 7 figures in these types of trading strategies. So I'm very, very much a show me guy, right? My FX books goes a long way to verification of this, which is great. So unlike the complaints we've seen lodged out of multiple settlements from many financial authorities, both in the European Union area as well as here in the US, have all stemmed from making all kinds of unsubstantiated performance claims. So it is the number one reason that people are either barred or blown out of the business is because of that. I don't care if you're a trading education company like us or an individual financial advisor here in Europe. You just cannot do that stuff, okay? It's basically fraudulent. So I would encourage you guys to always stay away from that. It sounds like I'm being paid to be compliance officer, but part of risk management is compliance. So with that being said, here is the 3K account. This is David's settings, okay? So David started this demo back in June. These have settings that are very different from what I've been talking about the last 4 months. If you're not sure what that is, go to my Telegram channel and make sure you view the presentation on the, this was Saturday was the 19th. Yeah, so the presentation was on the 12th. By the way, I have, since I have not gone in, by the very nature of the other software guys, the fact it has lower drawdowns, just from that perspective alone, it's more conservative. It doesn't mean that the trades that it is taking is more or less risk, right? They all present risk because we're trading foreign exchange markets, guys, right? And even though this is somewhat matured out, right, this is still, in my opinion, relative to equities and credit, which is the bond market, or options or futures, where I play mostly outside of this. This is still considered the Wild West by the institutional guys. So even though it is much more refined Wild West, essentially the settlers have established themselves in all kinds of different areas and built nice little cities, right? It's still kind of the Wild West. So, if it wasn't, by the way, and it was, there wouldn't be all these brokers out there just shystering folks. So, make sure you always take a look at your broker and the trades they're executing. Ask the top guys in your organization, what brokers are doing well, which ones are trading against your EAs, right? A versus B side brokers. There's a lot of games that get played with that stuff. So I've talked ad nauseum about this in the past, especially when I had Tyler on. We went into a deep dive on the broker thing. He showed some tips and tricks on that. You can look back to see. The other cool thing about that is, with another piece of software from one of our expert advisor algos that's coming out from actually my good friend Ryan, is going to have embedded in it a artificial intelligence, I guess, component that is going to see whether or not your broker's screwing with these trades or trading against it. It's pretty slick. So stay tuned on that one. Let me look at these questions before I let you guys go. Thomas Slavic. I love the first name, dude. I don't think I could pronounce it right, but said David offered his high risk management spreadsheet. Will it be possible using in the future? No, but you can get spreadsheets like this from your up and down line. I promise you, go high enough up in your upline, you will find whatever spreadsheet those guys are using. I would go that route. They're all kind of the same, but you can utilize how your spreadsheet you get your hands on works in relations to the one David showed. Hopefully that answers your question. Remember, if I was to give the spreadsheet out, guys, in my opinion, in the opinion of the FTC and 6 other governmental bodies in this country, I'm basically handing you guys performance expectations. Big old no-no. All right. Last and final call for questions. As I always tell you guys, while you're thinking of questions, if you're bored today, call or text a friend that is in this organization that you know has been struggling, and ask them, have you gone through Steve's videos? Have you gone through the Forex Basics course from Adeze? Have you seen any of the other courses from the other coaches, right? Oftentimes you'll find, yeah, I haven't got to it. And, so, you can use all the F1 analogies I always use. And for those that just watch the 24 hours of Le Mans, it's great stuff. Team Toyota Racing won again, 3rd year in a row. Why? Because these guys have just been ridiculously consistent in building great cars, having teams that can handle any of the odds. And trust me, there's a mass load of them when you're running 3 cars for 24 hours. But the consistency is a marvel of awesomeness to see. So essentially, with somebody that has not gone through the training, you're putting them in a race car and you're shooting them around a track at 150 plus miles an hour, right? I think that's smart. Nobody would say it is, right? But yet again, we see it continue to go on and on. So it makes my job more difficult as the risk manager. If somebody is unwilling to put the effort in, I have no sympathy for you if you're blowing accounts out. I don't know, Sean. David's spreadsheet is a guide, if you will. You can always maybe try and contact David directly. He's probably going to be pissed when I say that. But, maybe he's willing to share it with you. Maybe he's not. I'll leave that up to him. Nor am I going to give you his contact information because the FTC can probably fine me for that as well, right? So we want to stay clean. But one other question I got on Euro USD. It's looking like a little bit of a bounce at this point. Not much. Actually, let me see if I can. And we almost perfectly touched. Since you peaked, it peaked an eye around the corner, and it was rejected. So it rallied off that. Essentially we're up, I don't know, 15 pips from that point. So let's take a look at the candle. Yeah, somewhere in that area. All right, guys, I am off to a day of work. I wish everybody well. May the trades be with you. Follow me on Telegram. Follow me on Twitter if you want, at FXES Trader. Actually type that in the window. Do know that I'm going to be on a pretty big time podcast in early October. So I will release details of that once I get closer to it. But the guy is basically the Joe Rogan of podcasts and in the trading space. So I've been asked to do the podcast. I get asked to do a lot of this crap all year long. The vast majority of these organizations that ask me are all junk and have bad ratings, and they're a bunch of snake oil salesmen. So I don't go through with that. But I am willing to jump on Casey's podcast. Should be cool. So Twitter, open up the chat window, Asif at FXES Trader. Do keep in mind, guys, I do not post trades. Okay, the big old no-no in my game as far as FINRA is concerned. So I do a lot of retweeting. I do not, nor do I follow anybody that puts out fake news and crazy ass banter on Twitter, right? It's strictly trading related stuff that you can use. And I think that's what is a great tool with Twitter, because you'll see with some of the people I follow, many of them run large institutional outfits or research companies and or are fantastic traders. Many of them I am close personal friends with, like Tommy Thornton, and they offer just an ungodly amount of value for free. So something I am unwilling to do on Twitter because I just don't have the time. So with that being said, today's the 22nd of September. Thank you guys for joining. Welcome to all of our new subscribers. And honestly, guys, we got some killer stuff coming down the pike. Spread the word. Be well.